Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence.
Have you ever wondered there's so much going on in the world? Each day since we have been doing Almus Market Mornings, I haven't run out of stuff to put forward in my introduction. And we have been doing Almus Market Mornings for over 770 episodes now since 2021. Anyway, after South Korea's foray with the martial law, it was France's turn with political instability. The French government of Michael Barrier was toppled after 3 months in power. Interestingly, the far right teamed up with the left wing coalition to topple the government. Euro has actually been trading marginally stronger since this was possibly a well discounted move. Good morning, JK. A lot of political uncertainty around the world. Europe seems to be in a peculiar position with the French government being toppled and the uncertainty in Germany. What's your take?
Hey, good morning, Swaraj. Yes, first of all, congratulations to you also on completing 770 episodes on this Almus Market Morning. I hope our listeners are getting good value out of it. Yes, so since, like I mentioned yesterday, there have been a lot going on everywhere, but market moves, particularly in the currency and specifically, has not been much. So that is because we still have many things coming up. Market is digesting all this, and then eventually we should have a move in the market next week as we head into the new year. Yes, as you said yesterday, the French Prime Minister was boosted in a no confidence motion, as was well expected. And the budget bill obviously was not passed, but why euro is still holding up better is because it is still possible for all the three factions, right, left, and the center included, to come into some sort of a consensus budget bill to be passed. Only if it is not passed, there is a possibility of continuation of the same provisions which was given in 2024. So at the worst, it is going to be a status quo. And in terms of a political leader, there can be another nomination by Macron himself, who is the president for the last term. And hopefully market thinks that there can be a more consensual candidate where there'll be a more a negotiated bill that will be passed. In fact, French president has scheduled a news conference today evening in the European time. So moving away from Europe, we have had some good, rather important macro data from US yesterday. And it was, first of all, the ISM services data, which came much, much lower than what was expected. And in fact, in the details also show that the new orders and the employment, they were all lower. And the prices paid, of course, was as expected on the higher side. So market did react by slightly buying into the bonds. The data, of course, is only one of the very large number of data points that we are getting this week. We had Joel's data on Tuesday, and we also had the ADP numbers, that is the private payroll number data yesterday, that came in at 1,46,000, just close to 1,50,000 that was expected. But if you just probe into it, there was bigger downward revision of last month's number from 2,33,000 to 1,84,000. Once again, this can be seen as a slightly negative number on the employment. Now, also in US, Powell was speaking at a scheduled event yesterday, and some of the statements he made have been that he's very happy about the state in which the economy is. There is no urgency for rate cuts to be made. He also specifically referred to the extent and timing of tariffs under the new administration, but he said that the monetary policy cannot be forecast right now based on those uncertainties. At the same time, he also said the debt and fiscal deficit of the US government, which are not sustainable, will not be the guiding factor for the Fed monetary policy, which will be focused mainly on inflation. So this was very clear-cut statement from Powell on the monetary policy also. Yes, South Korea is in a relatively uneasy calm, but markets are also somewhat better today. Apparently, the South Korean authorities are using up the stabilization fund, a large stabilization fund they have created to keep the financial markets under control. Now, on the dollar, as I said, euro has held up, I would say, well, considering the kind of events that we have seen. Of course, the market may be waiting for more US data, particularly the non-farm payroll data that is due tomorrow. And let's not forget that there is a Reuters news which says Trump will be having a news conference, on interview with NBC's Meet the Press on Sunday. So all other things will be overshadowed by this event if it is, if it is going to be there on schedule. So market will definitely be not reacting too much to other numbers unless they are too far away from forecast. Trump saying anything directly in the news conference would be seen with a lot of attention. Now, coming to Indian market, Rupee had staged an intraday recovery yesterday, helped by persistent nationalist bank selling. But we still saw a record close yesterday at 84.74. What is notable is that in the first 3 days of this month, we have seen FII flow in the positive, adding up to over $2 billion. So what is keeping the rupee still low is the demand from general importers and oil companies. And there are good reasons why they have been doing. Break of 84.50, which was considered as a strong resistance, was broken very easily with GDP number coming very low. Then the sharp fall in the forward premium, by about 30 basis points is also now compensating for the move up in the spot. So importers are not much hesitant to hedge their payables. There is also an expectation that RBI in their policy statement tomorrow will talk dovish, and that can actually keep the rupee on the weaker side due to an imminent rate cut that is in February. But yesterday we had mentioned about forward premium falling and the option premiums rising. There is one more market that is moving in India, that is the bond market. The yields there have fallen nearly 15 basis points in the last 1 month, and this is possibly started when the RBI shifted their stance from one of withdrawal of liquidity to neutral. And this meeting also, there can be something for the bond buyers. So the yields are already discounting those cues. All said, rupee is not likely to make any big headway immediately without a bigger move from the dollar index on the downside. And historically, we have seen only when the US interest rates are going down steadily that the rupee, or if there is a quantitative easing, that the rupee, along with other EMs, gain. And both those conditions are not there now. Therefore, rupee, I think, based on global and the domestic factors, is likely to remain on the weaker side. But the fall, of course, is going to be quite controlled by RBI due to their intervention. Thank you.
Thank you, JK. And as you mentioned, there's a lot going on in the world. And just quickly, touching upon a few points that you covered. So the worst for the French is going to be a status quo on the budget if a consensus is not reached. So that's something to look at. From the data point of view, ISM services data from the US was much lower than expected. Details show that the new orders and the employment was also lower. Markets reacted by buying bonds, pushing yields slightly lower. ADP numbers also came at 1.5 lakhs. It's an employment metric, and it was closer to expectations, but there was some downward revision to the previous numbers. So slightly negative for the employment side of the economy. Euro has held up well despite the turbulent events. Markets may also be waiting for the crucial NFP number tomorrow. NFP is another important employment metric which investors closely track, and that will be released tomorrow. For rupee, we staged an intraday recovery, but it was weakened later, closing at a record low. And tomorrow, of course, there's the MPC, and it is expected the RBI will be talking dovish at the MPC statement. This is also because this is an important event because Leading up to MPC, we also had a not so good GDP print, and RBI projections will be closely looked at. So that's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.